yes, there we are. What's up, YouTube? How are you doing? Live from Riyadh. Here we are. The sun is shining for the Instagram followers. You guys know that this morning, I was surprised. I woke up to clouds in Saudi Arabia. I was like, yo, I brought the Dutch weather to Saudi Arabia. But hey, sun is shining again here. And this afternoon, I'll go back to the World Championships. But what's up, YouTube? How are you doing? I'm going to put the chat on the screen and put you on the screen as well. 1 second here. Just quickly managing this. My webcam is on. All good, all nice. So I only have one screen. What you see is what I see. So if there's no chat on the screen, it means I can't read your comments. But what I'm going to do in this live stream is, of course, we go over Elliott Waves, got some things to say, and got different scenarios and the probabilities, of course, later. Now we're going to run through everything that you see here on the right side. A couple of medium time frame scenarios, three low time frame, gap, range, something here, which is important for support, news, CVD, and the probabilities. The beginning of this stream is likely going to be similar to like video content, right? But then usually a bit more explained or a little bit in more detail because we're live. So, you know, I can spend a little bit more time explaining some things. And then we get to answering comments. Of course, there's the chat, you guys, and we'll be engaging. Planning to be online for about an hour, maybe 1.5 max. Because I do have to get my ass to first lunch and then I have to go to the World Championship. So, yeah, busy day planned later. I mean, busy, quote unquote, because actually this is probably the most relaxing day of the week. So that's nice. After very short nights, 4 hours when I arrived in Riyadh and 6.5 hours last night, I actually got a solid 8 hours in today. So happy me, happy me. So yeah, that's what we're going to do. I do realize I have many comments that I have not yet answered on my videos. And the main reason why that is because of where I am, right? Let me move this to the screen here as well. So I got many comments and I struggle to keep up with the comments because of what's happening in Riyadh. You know, I'm here with the World Championships. I'm a board member of the Global Esports Federation that's organizing this stuff. And while I'm out and about, the moment I exit my room and I go to the public areas, people chat, right? Like they like there's over 100 member federations here. There's 400 athletes. You know, it's a busy place. So I don't really have too much time to be on my phone and answer all the comments. So I struggle to keep up to date. So what I'm going to do as well in this live stream after the analysis is go through the comments, answer them in this live stream, and then you can still expect a comment later. Like I'll write, like maybe I forward the link of this live stream in a reply to the comment, because I want to keep up my streak of replying to every comment I got this year so far, right? Like kind of almost every comment I have replied to, with exception to probably like very few. So I always try to at least write something to you, because I very much respect and appreciate you guys taking the time to write something, right? It takes a little bit of time to write something in the comment section, helps the algorithm. So I want to at least reply to everyone. And I realized that I've not been doing a good job since I flew to Riyadh, because I don't have the time to really go into like comments. So that's what we're going to do as well in a little bit, right? I first want to go over the chart, over the Elliott Wave scenarios, over my thoughts. Then we get into the comments while we chat as well, right? So that is the plan. Let me actually open the water bottle. Probably get a new one as well. This is from the hotel, but they cleaned the room this morning. 1 second. Well, refreshed it, I suppose. I actually wanted to do a live stream earlier, not gonna lie. I was doing Elliott Wave analysis for the silver, gold, and diamond members. You guys have seen in the update section that I was posting some stuff earlier today. But then the guy from the cleaning came in, and you know, like I was like, yeah, you can come in, but it's a bit awkward if I do my stuff and he's like cleaning the room. So I was like, you know what, I'm going to get my ass to the gym instead. Okay, let me answer this question shortly. Then we get into the Elliott Waves. By the way, Wati, hello. Laura, how you doing? Good to have you here as well from all the way Australia. I'm closer to you now, by the way. Laurie, not Laura. Laurie. Christian M, also closer to you now in Thailand. Manoj, Kumar, welcome. Gabriel, one more high in January around 46k, and then we start the big dump. Yeah, I'm still looking for higher, but we'll get there, right? Won't be surprised if we dip. Why are the lines on the chart, right? That's the question you got to ask. Is wave B forming a triangle? It's not yet something that I'm looking at just yet, but we'll get to that. Hi Thumb 911, hi from Riyadh. Welcome, my friend. Mate, come to the arena, the Saudi Esports Federation Arena, SEF Arena. Google for that, and I will meet you this afternoon or night. It's open till 12 p.m. So, if you have time, then come in, send me a message on Discord for anyone that is in Riyadh, right? Send me a message on Discord, either in one of the channels or a private message or comment or whatnot, and we'll fix something. Like I got time when I'm there. Please analyze Bitcoin. I will. Oh wait, Aman, there you are. This time not talking about the Nifty 50. Yannick Granger, how you doing, man? It's good, but I will answer your question by going through my Instagram stories quickly. What will be the target for wave C, lower low from 69k to 15.5? Well, 8 to 11k. That is the main wave C target, and you have a golden pocket around 10.9k from the low of like 3k to 69k. The golden pocket on log scale is around 910 for the bearish scenario, which also is the value area high of the range in 2018, the weekly range, right? So very, very big support. But check out my macro analysis for that. So sure, we will see. Yeah, I know it's not easy to jump. I go to an event. But yeah, how was Riyadh? I've been posting actively on my stories, or very shortly. I was at the Kingdom Tower. Oh, that's unfortunate, actually. My stories from Monday are not there anymore. I was at the Kingdom Tower on the Kingdom Bridge, which is this building, because it was literally the number one thing for a tourist. So I was like this thing. So I was here on Monday, and then I also went to the historical city. So I was also here, walking around in this area with my local tour guide, which was my Uber driver. I somehow always have Uber drivers that are eventually going to be tour guides. It happened to me in Dubai as well. Now then, yesterday was the busiest day. How can I stop? Oh, here. Yesterday was the busiest day. I had a board meeting in the morning, which of course is private, so I can't make any pictures here. Then we had the General Assembly as well yesterday, which is with over 100 member federations. We have 153 in total, but not every member federation got a team in here as they weren't qualified. But big General Assembly, also re-election of some members of the board each 4 years. Some members go up for re-election because they've been there for 4 years. It was my turn to be either re-elected or not, but I've been re-elected. So I'm going to be in the board again for another 4 years. It's a really big organization, by the way, the Global Esports Federation, 153 member federations, 30 partners. We have people that are in the chair of UNESCO, the Olympics. It's crazy stuff as well. And of course, many esports peeps. This is at the event over here, Riyadh 2023, the map. You can check that one out, right? We had the opening ceremony yesterday as well. Dutch weather in this morning. Went to the gym. Of course, we gymming, right? Wherever we go, got to get the fitness in. And yeah, that is that. So my time is good. My time is good, right? Of course, I remember you, Aman Gupta. The people that come back in the streams or write the comments, I always remember who you are. Even Dasa Gaming, no idea if he's here, but he wrote me on Instagram as well. So he's following the stuff. Okay. Facts Daily Short. I'll get to you in a second. I think we should do a Dutch meetup and then talk Elliott Waves, maybe teach you guys some stuff about the waves or whatnot. So oh, that's always very interesting. Do you know, by the way, if you have an algorithm that if you want to publicate it, I know a company in the Netherlands, Bots, they do that stuff, like algorithm trading. But yeah, absolutely possible to meet in the Netherlands. I mean, small world. So Okay, let me start. Let's go. Elliott Wave analysis, which means that I only have one screen. Chat is going to be off, right? I'll go back to the chat in a second, and then we get to the comments that I want to answer on my YouTube channel because I didn't have the time to, answer the comments. And I want to respect everyone that takes the time to write a comment. So we go through everyone here, different scenarios, right? And at the end, we get to the probabilities. So hold your horses because we go through this stuff here. But at the end, we go through the probabilities of what is the most likely, and then categorized in most likely, like I have slightly, like almost the same probabilities, but I have like one most likely, a little bit less likely, and then the least likely. But the reason I show multiple scenarios is that the moment something happens on the chart, right, in between my content, in between the videos, you can switch in the scenarios. And that is what we do with Elliott Waves. The moment new info comes in, scenario A becomes maybe less likely or invalidated, we switch to B, right? And that is why the probabilities and stuff is interesting. So let me go over this. I do realize medium time frame stuff, some people have heard some stuff already in the past couple of videos, but there is new information as well. Also the way I here categorized my folders today. So this is the bearish / bullish scenario, meaning we are going to continue ranging here for a little bit, and then afterwards we get the push to the upside. While I see my Atos is still on, so let me actually close this because it's very heavy for the PC. This is Atos, by the way, the template shared in Discord. Current monthly point of control, current weekly point of control, but it's currently it's still on. So let me quickly close this here. Yes, because it's quite heavy for the laptop, and my laptop is I can cook an egg on it at the moment. So okay, so scenario 1, this is the bearish / bullish scenario because we expect a bit of a range and then continuation to the upside. 1 2 1 2 1 2 3 4 5 4 5 4 and eventually 5. Depends how deep and how long this drop is going to be, because the probabilities are basically for me between either this scenario or the bullish scenario, which is coming up in a second. So here, these fibs are pulled from the low of 2 to the high of 3, which you can see here by the dots on the chart, right? Low of 2 to the high that we have. I actually chose this little high, but you can take either, it doesn't matter, a few dollars difference. Currently, we have bounced on the 236. 236, 40.3K. Maximum target for a wave 4, 35.3K. Wicking below this area, no problem. Closing candles below the 05, not preferred. Hitting the 618 for me invalidates a wave 4. There was a question about that in the comment section, by the way, but I'll answer that in a second. It has to do with probabilities. So 0.618, 33.1K. You don't want to see a wave 4 going all the way down here. Now, what wave 4 does like to do is go to the wave 4 of a lower degree. So inside the green wave 3, we have the blue count. 1, 2, 3, 4, 5. Price action of your wave 4 is over here, which is basically from the high of blue 3 to the low of blue 4. Drag a box to the right. This is an important area on the chart. If price comes down, this is going to be the support for green 4. It's not a guideline, it's not a rule that a wave 4 goes to the wave 4 of a lower degree, but it's common. So it's something that we can keep our eyes on. It's also in confluence with the 382 to the 05 area, which out of these fibs over here is the most common target area in 4. So I always say the common target area is 236 to the 05, which is true, but most commonly, based on statistics, the 382 to the 05 is hit more often as the low for a potential wave 4, and currently we're bouncing on the 236, but I have a scenario coming up where we could go a little bit lower before then continuation. And after wave 4, we're then looking for wave 5. What I prefer to see in this scenario is going price. Let me zoom out so you actually know what these lines are. This is the volume profile of this big range over here, where we have value area low, point of control, value area high. Value area high is right around 49.5, 50K. What I would like to see for the high is a fake out of 50K, basically. It's a bit weird to talk about a fake out at 50K, but what I mean is you get high volume move to the upside, you break the psychological level, maybe even go to 52 or whatnot, right? And if you get a little bit of a strong move to the upside, like, you know, something you have over here, volume increasing, stronger move to the upside, volume coming in, people are going to start thinking about this. All-time highs, fear of missing out, right? They're going to be buying, but that is the liquidity that I'd be looking for, and that's also the panic and the greed that I'd be looking for then a move to the downside, right? The moment everyone is happy, everyone is hyped, everyone is greedy, you get this stuff, right? That's what I'm then going to be looking for. So preferably break 50K and then see the drop, or alternatively, do not reach 50K. So instead, you're going to go to 4678. You're going to go here. You're not going to reach 50K, which is a level that people are looking at. And you're going to drop before you reach that level. So that the people that are trying to short the 50K area are left out and have to buy or sell, at lower prices, right? So that is quite interesting indeed for this particular scenario. Now, the low time frame scenario in confluence with what you're seeing here is at the moment a scenario that I have in mind here. Now, a wave 4 can be any corrective structure, right? Can be simple, can be complex, zigzag, WXY, flat, triangle, all the good stuff, right? So we have, like, it's a very big range, and if we are looking for the green wave 4, we might over here be looking at only the first structure. Now, if this is the first structure, there are still many possibilities, but this is currently something that I do have in mind, right? And as price evolves and we get new information, we're going to update the chart accordingly. So in this scenario here, by the way, wave C target area on top of the 382, based on the pool that I did here. But what we're then looking for here is the high. I'm still not, I still don't really enjoy this as a 5-wave structure to the upside, not going to lie, but we'll talk about that in, here, the medium time frame bearish scenario. Like, there's still the A, B, C for the bulls, but okay, I'm ahead of myself. In this scenario, we're either looking for, let me drag that, A, B, C, a dragged out, longer corrective structure, where especially wave B can be a longer structure, right? Wave B tends to be the wave that takes the most amount of time in a zigzag to the downside here. 1, 2, 3, sideways 4, eventually 5, then looking for a new low. Now, what is quite interesting is on the lower time frames, like arguably your 5 is already in, but that is at the moment the question, because you could have your 4 here, your 5 here, and then you have your wave A is finished, right? That's your that's your A here. This move to the upside, you can count this as an impulse, yes, and then a corrective structure, potentially another move to the upside. But we'll get to the probabilities in a second, because you will see in the probability section what we're looking for, and probably you get an idea as well based on the scenario shared. But what we're basically saying here is we are soon looking for a bit of a bounce towards the upside, where we're then going to be looking for a wave B in this bearish but eventually bullish scenarios. We expect a bounce to the upside. Now, what's interesting here is, first of all, the support, right? Daily naked point of control 39.5, also 38.8, which also is the point of control area of that high time frame range, right? 38.7, 38.8 is an important area for support. So this is interesting. If price comes down, area of interest for potential bounce towards the upside. If we do look towards the upside, I actually added a new target box that I'd like to show you, which is the high of the dotted line that I have here between 43.5, 43, well, basically 44K. There is 3 reasons why it became a target box here. First of all, on the 3-hour chart, we have a gap, which is this one over here. The first time price enters or hits the high, or the low in this case, hits the gap, you can expect a bit of resistance. That is very common, little bit of a move. But the moment price is going to close candles inside of this gap or comes back down or back up again, probabilities increase to fill the gap to the high. And the high here of the gap is the low of the target box. Now, beside the high of the target box, we also have a daily level here at 43.793, and we also have this range point of control, which is the red line you see here at 43.8, which is my main area of resistance for this area here. It's that point of control, which is very, very interesting. So that for this particular scenario is going to be an important area of resistance, where if we do make another low, then probabilities do increase. We're going to continue ranging for a while, right? And I'll explain why in a second when we go to the bullish scenario. But if price is going to take this low, then probabilities increase. We're going to be stuck in a range for a little bit, either in this ABC that you see on the chart here, or I'm going to be looking for a WXY type of scenario, where this wave W can be actually a twofold scenario. We could have over here ABC in wave W, then we're going to be looking for X and eventually a Y. So again, we're going to be looking for a continuation of a range over here, right? For then potentially a bigger 4 move to the upside in 5. That's what we're looking for still. Or you have here an ABC. That is your W, which is a flattened W. Then you're going to be looking for X and then a wave Y, with Y then being either a zigzag or a triangle. It's too early at the moment to call WXY or ABC in this bearish bullish scenario, because in both scenarios we're expecting a bounce eventually, right? You want to see the lows take and eventually you expect a bounce, which then either is an X or a B, but we don't know yet, right? We have to wait. We need more information. So that's that. Okay, let's go to the bearish scenario before we go to the bullish scenario. Teasing you guys. So, opala. Bearish scenario, which for me is the lowest probability scenario. Now in this scenario here, we're looking for 1, 2, 3, 4, 5 finished, right? Finito. And at the moment, I'll get to that. So what we're looking for here is then a 5-wave structure to the upside, right? 1, 2, or arguably that's the, let me go to the 6 hour here. You're basically looking at a finished impulse to the upside and finishing your green 5. So you expect a bigger corrective structure to the downside. Then you expect much lower prices than a green wave 4, right? You're probably going to be looking for, where is my folder? The weekly gap, 34 to 30. On the weekly time frame, we got a gap over here. It's the same as the gap that I just shown on the 3 hour, but then on a weekly time frame. So this is interesting, but you're likely going to be looking for a much bigger retracement to the downside. If I pull some fibs in a bullish scenario, trying, there we go. In a bullish scenario, you're then either looking for a wave B, common target area 05, 34,850 to the 786, 29.1, or you're going to be looking for a wave B, which has the same for then a zigzag. A, B continuation. I don't really like, then I have to talk about high time frame stuff, but that's outside of the scope of this particular video. But the 05 to the 786 is the most interesting area, 382 at 37.2. So yeah, you would expect a deeper retracement if that is indeed the case, this bearish scenario. So locally, then looking for a 5-wave structure up. Now your blue wave 1 can either be positioned here, right, or it can be positioned here. It depends a little bit on this wave 4, WXY potential, like corrective structures. But eventually, it doesn't matter. You're going to be looking at a finished structure to the upside. That's that. So the final move to the upside, though, that is the thing that gives me a hard time. It's this low time frame count here. Locally, you're then looking for this to be your 5. Reason is that I put the 5s here is that on other charts, this is the high. Yeah, on my chart, I have a bit of a wick. There's also comments about that one, which I'll answer in a second. But this is the high on many other charts. So, this is then the high. Because if this would be the end of your 5 in green and 5 in blue, and you're going to be looking for maybe even big moves to the downside, you don't want to see the high taken again, because then you're thinking about a flat or a WXY, which is not a deep retracement. It's more of a sideways retracement. It can get deep, but probabilities. So here, 1, 2, 3, 4, 5. The issue here is the overlap that we have between your 1 and your 4, A, B, C here, then in a 4 potentially running, or WXY. It's not neat. I don't know. This structure here is just not a pleasant structure. This move up went very quick in your 1. WXY wave 2 is very long wave 2 compared to your wave 1, like incredibly long, right? Unusually long. Then you have your 3, 4 overlap. Like putting wave 3 here does not make sense to me based on this little small wave 2, right, that you have here. This is an impulse 1, 2, 3, 4, 5. That looks much better than 1, 2, 3, big 4 and 5. I'm not really feeling that one. So yeah, 4, 5, 1, 2, 3, 4, 5. So can you count 5 waves in there? Yeah, but you can also count a zigzag, right? A, B, C, A, B, C. So it doesn't help the bearish scenario, let's say. So let me turn this off. Now, on the low time frame, then of course, you're looking for an impulse. So instead of an ABC in the bear/bullish scenario, your price action is going to be similar. But after a B and a C down in the bearish scenario, you're simply looking for a 2 and a 3 down. That is the main difference. So the price action can be quite similar. It's just the next move down that is going to be the biggest difference in this case. Now here you then have a 1, 2, 3, 4. Arguably, again, 5 is in, or we're looking for a longer 4 and eventually another drop in a 5, which, you know, based on the local price action, yeah, increases a bit in probabilities. We want to see more strength, of course. Wave 2 here hit the 0.382 Fibonacci, taken from the high to the low of 1. Less common for a wave 2, more common for a B or an X, so something we keep in mind. But yeah, invalidation is taking the high. And then we get to the bullish scenario, which is the final one, which is also very simple, as you see on the chart. 4 is finished. We're looking for 5 towards the upside, where we're looking for a 5-wave structure, where we're now in a wave 4. So 1, 2, 3, 4, 5 on the lower time frame, which is what you see over here. The reason that for me this slowly decreases a bit in probability is the ranging on top of the 05. Not too big of a fan just yet. I definitely want to see some strength, and especially I want to see price going above this order block. We have a 12-hour order block here, right? This I've shown it in multiple videos. This level here acted as support, acted as resistance. But you want to pass this before taking the low. If you take the low, hit the 618, you're close, right? 618 is close. We don't want to see that 618 hit for a wave 4, which would then, for me, really decrease, kind of validate because of probabilities. The probabilities of this particular scenario. Volume-wise, though, currently the high here is made on high volume. On my chart, I do know on other charts you have a higher high here on lower volume. So potentially your 3 is then moving over here, and you have a bigger 3-wave structure, but it doesn't matter for the Fibs because you want to be looking for the 05 as the max target and a move to the upside. 618, 39.9, we don't want to see that. No? And then we look for a 5 to the upside. But that means we want to see local strength. We want to see price moving to the upside. Right, we get to that in a second. Other folders, yeah, I showed the 3-hour gap. Order block over here, by the way, 41.7, 42K. I've shown that. The news, we have some news as well. 8 p.m. Central European time, also 2:30 orange, but I never really look at the orange flags. 8 p.m. Central European time and 8:30 p.m. Central European time. We got some news coming in, so make sure you trade safe, right? Because it might increase volatility. We don't have a lack of volatility here this week so far. I mean, Monday was volatile. We are in a range, of course, at the moment, but it might increase volatility. Now, considering the divergences, keep an eye on the 3-minute to 15-minute local CVD as well. But we do have some bullish CVD divergences here. Higher low in price, lower low in the CVD. Target is taking this high over here. Now, if price takes this high, you'll see it will also get back above the 12-hour order block, which in the bullish scenario is what you're going to be looking for. You want this to be your low. You have a wave 1, and you're going to be looking for eventually wave 3 continuation, where the news should then help as well. No, so bullish CVD. Locally, we had a little bit of bearish CVDs. These have now played out as this little low got taken. Let me show you how the CVDs look on the CVD chart here, AGGR chart. You can find more info about this stuff in my CVD video. Just go to my channel, go to videos, look for CVD, and you'll find a video including, you know, one pager in Discord, my template, everything. So higher low in price, lower low on blue as well as on yellow, bullish CVDs with this low over here, increasing probabilities for price to move to the upside already. And we continue to keep an eye on what's happening locally here as well. Now I know this is 15-minute time frame stuff, lower high in price, higher high on the CVD here. Bearish CVD divergences, price moving down, took the low here, played out, neutralized, right? So now we got the bullish ones left. But we want to continue keeping an eye on the local one, because if price is moving to the downside here, and you see on a 3-minute time frame that the CVD is turning bearish all the time, then yes, you can have a 15-minute bullish CVD divergence, but the 3-minute is going to be more important. The more local has the highest probability. So we're going to continue to keep an eye on this, right? Local price action. And if we then get to the probabilities of these different scenarios, then on the medium time frame, based on also the folders, right? I'll open the folders again for clarity sake as well. 1 second. Zooming out a little bit. So on the medium time frame, 1 bear bull, close to bull, but you know, we want to see local strength coming in, and at the moment that's not yet. We see some bullish CVD, but also, you know, a little bit of bearish. So 1 here would be this scenario. No. 2 is basically this one, but it lowers, you know, it just lowers in probabilities because we're ranging on top of the 05 and we want to see local strength past the 12-hour order block. I'll be more excited. If we take this low, I'm probably going to remove this this whole scenario. And then 3, bearish scenario, where we're going to be looking for this to be a wave 1, 2, much lower prices to come, right? But we're still expecting, and that's the thing that you read here down here as well in the summary, because the low time frame probabilities are the same as the medium time frame, right? It's just a lower time frame scenario. Looking for a move back up soon or now. Move up is temporary bounce or continuation. That's what we're looking for, no? Making life a little bit easier is if we are looking on the low time frame stuff, yeah, we can make another drop, but we're going to be looking for eventually a wave B up, right? In this particular scenario here, or even in a WXY, we're looking for a bounce. In the bearish scenario, you're looking for a wave 2. And in the bullish scenario, you don't want to see the low taken. You're going to move towards the upside already. So what we're looking for, or start to look for, is the entry requirements to be hit. You know, if you have a strategy or you have a plan for moves towards the upside as well. At either a bounce or continuation, but that depends on the new information that is then eventually gonna come in. So if you make this stuff here more easy, instead of 1 2 3 1 2 3, if we condense the information and just bring it to you a little bit more simple, it is that, yeah, we can make another low, yeah, we do have some support down here as well, but we're going to be looking for also a little bit of a bounce coming in. And if price does move to the low, we're going to simply wait for proof of support, right? We've got a couple of support areas to the downside. Where's my folder? Couple of support areas here to the downside, the big point of control. We got the previous range that will undoubtedly react as support as well. So if price does move down, we're going to be looking for proof of support, whatever that is for you. CVD, RSI, stochastic, candlestick patterns, other patterns, whatever you use in your strategy, order flow, you know, doesn't matter. Anything can be a strategy. Trend lines, huh? But we're going to be looking for some proof of price holding in that area, where afterwards we're then going to be looking for a bounce to the upside. If price comes down, we're eventually going to be looking for a bounce towards the upside based on our proof of support. More locally, we have bullish CVD divergences. It's not a bad area, but we want to see some price price moving to the upside here. We don't have local bullish CVD divergences. We do have the bigger CVD divergences, so there's definitely a valid little bit of support going on. But yeah, this low made on a little order block. This is the thing. We found resistance at the 12-hour order block. Past this resistance, I'll probably be looking for the target box over here. You know, if we can pass this, retest, I'll probably be looking here. So yeah, that's that. There we go. Elliott Waves in a nutshell. Let me see what chat is up. And also, I got to blow my nose. 1 second. I doubt it's probably the aircon. In Twitch, they would say chair stream, chair stream, chair stream. Okay. Whoa, TXM with the green badge. Nice. Look at him go. The green one now. That's it. First time I see the green one in a live stream. By the way, I also want to say, when I started the YouTube channel, and I started to be from the 20th of February, I made a little bit of a plan, wrote some stuff down, and based on some other channels, I made a goal. And I was like, you know what? I'm going to be mega consistent, show up every day, and we'll see how it goes. And I happened to, before leaving to Riyadh, I happened to see that notebook. So I went through it. And the goal I wrote down was 5,600 subscribers at the end of the year. Now we are very close to 5,600 subscribers. I rarely ever really look at, you know, the subscriber count. Of course you see it, but it's not really something I really pay attention to too much, because I want to focus on the content. But you know, for the sake of growth, I had a little bit of a goal, and you know, we're almost there, which is quite insane, very insane. Quite a solid goal as well. So okay, what's up, chat? How you doing? Oh yeah, answer this question. So yeah, absolutely. I'm you know, thinking maybe we can, like, a little bit of an event in the Netherlands, like a meetup can be fun. Whoa, been to a couple of towns in this region, but I missed Riyadh. Yeah, it's a big region. It's a big region. Santos, how you doing, man? TXM, good morning. Roller, goedemiddag. Gabriel Shalaru, first scenario, 38.6. 38.6, that's here. Yeah, and then 43K. That is in the gap. So I'd be looking for either the low of the gap or the high of the gap. So either then 42.45 or 43.5 basically. But yeah, I agree. Then 36K, so then you go a little bit down. Yeah, so like Gabriel, that is the ABC scenario. Agreed. Robot, hi friends, how you doing, Brian? Can you look for the ABCDE triangle on the lower time frame? I think it's a bit too early yet to call a triangle at the moment. So that's also a thing. Let me have a look here. Wave B in a triangle can wick the low. So what you're then probably looking for is this A, B, C, D, E finished. And you're now going to be looking for this 1, 2, 3, 4, 5. 1, 2, and you're going to be looking for a 3 to the downside, right? Well, actually, the triangle ended here, so. Now, this would be a running triangle. Because wave B took the low of wave A. I only have wave B running triangle. Okay. So we didn't hit the 618. Very close to hitting that 618. Now, in a triangle, of course, all of the rules have to be zigzags. Preferably volume goes down. By the way, C or D can be a more complex zigzag structure, right? Double or triple zigzag. Wave E can also be a triangle by itself. But yeah, this is it's a solid structure. Let's see, volume moving to the downside. Your wave C started on higher volume than what you got in wave D, at least on average. A, B, C, D, E. Yeah, now you got a little bit of bearish CVD divergences. So yeah, I mean, it looks good. No, it's an option that you have. So I tend to zoom out a little bit more based on the price section that we have. But you know, my number one, the one that I put on, or the scenario I put on one, would be another move to the downside. Scenario on 2 would be already continuation up. But as mentioned, we're ranging on the 05 in yellow, right? Which is not really something you like to see. And if you are looking for bullish continuation, yeah, you want to see strength coming in, another rejection at the 12-hour order block. So this scenario would be one of the potential wave 4 scenarios for a move to the downside. So I do think it's a solid scenario that you have going on here, and it's a nice find as well. So yeah, absolutely, it's a possibility. It's a possibility. It's a very short C here, like this wave A, B. This is let's see, A, B, C, very long C. This is your wave C is then a double zigzag, more complex. D is an ABC, E is also an ABC. So yeah, it has potential. Muharram Imam Chowdhury. Christian M, you deserve much more. Thanks for the support, man. Christian has been here for a very long time. Every time I see Christian writing a comment in YouTube, then in my YouTube studio it says that he is one of the people that has so far in the channel the most hearts, because I always heart a comment the moment I've read it or commented it. He's been there for a long time. Bit Phantom, I live in Jeddah. Welcome to Saudi, brother. Thanks, man. Living in Jeddah, living in the heat. That's nice. I've not been to Jeddah yet, but hey, we're in Riyadh. At least I'm relatively close. Please analyze the 5-minute. Santos Signs, we love a meetup. Yeah, we should organize that. I once got a DM by a guy from England, and he was like, "Yo, Kun, are you gonna organize any events anytime soon? Because I would be willing to fly from the UK to the Netherlands to attend an event with like-minded people that want to learn more about Elliott Waves, the way you trade, what you do, and what you use." I was like, "Yo, and it's already a while ago. That was like month 3 or something." So it can also be fun to combine a meetup with more of an educational type of event. The 5-minute, I usually don't really go to a 5-minute time frame. Usually with Elliott Waves, I like to stick on the 15, right? Now with the triangle scenario that Mohammed just mentioned, that would be the bearish one here, right? Bearish scenario, because you're going to be looking for a move down. Your bullish scenario is that this is your 4, this is your 5, this is a 1, 2 continuation, or an ABC, right? However, you know, we've been through the probabilities. So for the people that of course just joined, they can have a look. But the 5-minute, it usually doesn't really give too much information. The bigger picture, like 15, is something I enjoy. Like if I try to count this, it looks corrective to the upside. Like from if this is your low and you want to count an impulse to the upside, you have 3 options. You have a 1, 2, 3, 4, 5, right? 1, 2, 3, 4, 5. But then what's this, right? 1, 2, 1, 2, 3, 4, 5 doesn't look too great yet. Or you have a 1, 2, 3, 4, 5. But then 2 is so long compared to 4, also doesn't really look amazing. So then I would prefer 1, 2. It's, you know, looks a bit corrective, no? The other option is you have a diagonal. 1, 2, 3, 4, 5. After 5, correction to the downside in 2, then continuation up in a wave 3. You want overlap between 4 and 1, preferably. By the way, that's not a must anymore. It's a guideline now, and not a rule anymore. 1, 2, 3, 4, 5, and then a contracting. This thing here is not look. And all in a leading diagonal, all of the waves have to be either zigzags or 5, 3, 5, 3, 5. That's what you're going to be looking for. So locally, to get a better idea of the probabilities, I would like to use stuff like CVD, right? I'm going to keep my eye on what is happening on the CVD so that I can, have a better read. So some people like to use RSI with Elliott waves, but I kind of like use a little bit of CVD divergences. I never really use RSI. You never see me using RSI as well. So arguably there is a bit of an impulsive structure, but I prefer to zoom out. 1, 2, 3, 4, 5. It can also be an ABC, right? A, B, and then a wave C, 5-wave structure to the upside. So that's the thing with the 5 minute. There's a lot of stuff going on. It also changes very quickly with new information coming in. Oh, by the way, the third one is a double 1-2. Almost forgot to say, but then you have a 1-2, 1-2, 1-2, boom. So you don't get a move down and then a boom. That is the most bullish scenario, but then you want to see preferably bullish EVD, bullish EVD, bullish EVD up. You want to see it building, which at the moment we don't really have here with these higher lows here. We did have a bit of bullish EVDs here, so that's something. But these already played out. So yeah, I prefer to. I'm a very patient trader myself. I like to give price some time. Like, what? What's up, Vitalian? What's up, Goku? Where can we find the Ethos template? It's in general chat. I haven't yet actually put it in. Good to know. You got to scroll up a little bit, and then you see 2 files. These 2 here. Those are the templates. I actually still want to make a video about it. Okay, let's quickly answer the comments as well, which will be a bit educational for you guys as well, because some of the comments were questions. So, oh, forgot to hard this one. I'll just hard it. Pistachio is an Elliott Wave counter. He's been he's been there since the beginning as well, this guy. Yeah, wait. Oh yeah, the gold badge. 4 months now. Nice. Look, this is what Christian has as well. Top commenter. So he had a question about an impulse to the upside, which was a structure here on the 4-hour chart. Can this be an impulse? This move to the upside, because wave 4 almost hit the 618, but just missed out. So that was the question that he had. And where is my chat? Oh, here. So I really struggle to count it as an impulse. I like to know if someone did it. So I sent him two screenshots here. So in the bullish scenario, right, you can count this 1, 2, 3, 4, 5. Your 4 is deep, no overlap with 1, not the 618 being hit. And then you have your wave 5. And in the bearish scenario, on that, like there, that's the low of your Y. And this is your first impulse. So instead of this X here being a 1, 2, 3, 4, 5, this is your first one. And it would be more bearish because of the consequences you get. Because if this is your 1, 2, then you can have a 3, 4, 5. But if this is your 1, 2, then likely your 4 is already in, and you might be at a high, a bigger high, basically. That's the difference. The thing is, we don't want to lose like too much time going over details. Where's my chat now? Did I just remove my? I think I just removed my chat now. No? Yes. Hello. I removed my chat. Or not chat, like the comments. So that's what they had a question about, and it's a solid question. It's a good question. Don't lose yourself too much in the very low time frame detail, because when the new info comes in, that is where you can get the best probabilities again for what's coming. However, it is a very good question. It's a very good. It's very well found, right? And it has to do with the Elliott Wave rules as well. So there you go. I'm gonna heart and reply every. You should set primary as bear. I love these comments, right? Primary at the moment is not yet the bear. However, everyone, of course, has their own counts, probabilities. So for me, it's just not yet. It's too early for me to call primary bear. So, oh, by the way, here's Christian, top commenter. Richard always likes to say could go up, could go down, but he forgets about could go sideways as well. So I might have to add that to his comment. I don't really think he looks at the probabilities at the end of the videos. Funny money, we was like you were previously like another very long name, but El Habibi, yalla yalla, have a nice buscation. Thank you. Radiant Jumper, pretty good. I always was wondering, expecting wave 5 when thinking that 4th was going to be deep up to 618. 5 was truncated. My trades were getting trapped to the point of liquidation, then realizing that it either was the 5th large drop, or I was thinking the deep 4th afterwards, followed by the truncated 5th. Holy moly, which it turns out the 2nd and the big drop is the 5th, followed by price reaching 618 from the high. 2nd is the 1st. At least I found some clarifying. I'm happy you found clarifying, my man. Jeez. Okay, I'll reply to this later. I don't really understand, but I'm happy you found clarification. Bepaalt de price chart the trend of the CVD? Oh, this is a Dutch one. Does the price chart trends bepaalt de price? Does the price chart decide the trend, or does the CVD decides the trend? Sometimes I get confused. Price always decides the trend. CVD is a tool with which you can read market orders, market buys or market sells. By the way, for everyone, this is the CVD video, which you'll find on my channel. CVD is an extra, right? Price is the primary thing, but CVD can be an extra tool to use in confluence with other stuff to get better probabilities for certain trades, right? And that's what we do as a trader. We play. It's a chance game. We want to have the probabilities on our side, and if the probabilities are on our side, we can just trade the same setup that we have every time, because we know that over a long period of time we'll win. It's the same as poker from that respect. Thanks, Lowry. Christian, greets from Thailand. Greets from Riyadh now. How do I find out when wave 4 is going to be finished? Well, theoretically, you don't till the moment you get a 5 up. However, in this case, if we are looking here for a wave 4 in this scenario, right, the bullish scenario, trading wise, from an Elliott Wave point of view, for the bullish scenario, this would be your low. Like your low has to be in this scenario. If you're looking for 1, 2, 3, 4, 5, you want the low to be in already. Because this low is so far below the 05, so close as well to the 618, but you don't want to hit the 618. So in this scenario, it's quite easy. If your wave 4 is finished, this is the end. basically, right? We don't really want to see price coming down here again, as probabilities are then very high to hit the 618, unless you then wick it again and move, but that's messy, right? So preferably your low is in. Now, when is a wave 4 finished, I would use two things. One, look for an impulse to the upside, right? So we're going to be looking for a 5-wave structure from the low, 1, 2, 3, 4, 5, or a diagonal structure in a leading diagonal. Second thing, I want to see bullish CVD, but that's something that I like to see. I want to see bullish CVD divergences as well, because it gives me more confidence. If you have your wave 1 and you get your 2, I want to see bullish CVDs between the low of 1 and the high, or and the low of 2, or if you have a move to the upside, 1, 2, and then another like 1, 2, then, or I want to see bullish CVDs here, but I want to see bull CVDs building in a bullish scenario, of course, that is, which gives me a little bit more confidence, and that's how I use CVD as well with Elliott waves, no? So yeah, that would be answering that question. Thank you, Crippled Kittens. Marcus also with the green badge, 6 months. Jeez. Wait. Oh, of course. Yeah, okay, I get it. Yes, 6 months. Holy moly. The green badges. They are there. They are there. Yeah, incredible. Luna Cave. Look at that. 1 day. 1 day subby. I've been trying to learn a couple of strategies to use Elliott waves, but I'm just not able to get it down and how the instructor is presenting it, which I suppose is me in this case. Do you have a video here that explains how to learn a couple of strategies that use Elliott waves? So it's basically about how do I make my strategy. A few steps to follow would be: 1, besides Elliott waves, I mean, look, you can trade Elliott waves, right? With Elliott wave scenarios based on your preferred scenario. So step 1 would be, and by the way, for people that are just coming in, the analysis part was at the beginning. Now we're just going through the comments that I haven't been able to answer because I'm abroad at the moment, busy days. So I'm just answering them on stream. Then we do a bit of chatting with the chat here as well, of course, like you guys, right? And then, yeah, we'll end it because I have to go back to the championship. You can trade Elliott waves, and if you do, you always trade your preferred Elliott wave scenario. So your highest probability Elliott wave scenario, or your maybe very close second if you have two up and running, would be your Elliott wave trade, basically. So we are looking for a bounce here locally, right? Now, arguably, one Elliott wave setup is entering here looking for upside, stop loss below the low, which is in this particular scenario, that's your Elliott wave setup, right? You're at the 05, you want to see price moving up. If the stop loss gets hit, that is the moment where we change to over here, looking for support, Elliott wave move to the upside, right? The thing, of course, is that what I like to do is I look for proof of support or areas of extra support or resistance, which give me more confidence, because sometimes with Elliott waves, you have an area, for example, like an area for a wave 4, like this is, of course, pretty big. This is a big area for a wave 4. Now, if you trade a wave 4, I don't like entering on a 236. You know, I want to enter around 302.05. Where's the stop loss? On the 618, because that's the invalidation. What you're going to try to look for? Wave 5 to the upside, right? That's going to be the goal, which can be an impulse and sometimes can be quite long. So then in this scenario would be something you look for. If your stop loss gets hit, you're simply looking for your next scenario. 5, look for an upside, potential B and then C down, depending on the reaction here. You can also look for continuation if you're looking for an A, B, C up, which is the bullish scenario, right? So you're going to be looking for a little bit of a bounce. That is at the moment the expectation, right? That's what we are keeping an eye on. We're keeping an eye on a bounce to the upside, either directly or first a drop and then a bounce. So, and based on the move to the upside, we then get the probabilities again for continuation or a move to the downside. So what I would recommend, which is what I've done personally, is besides Elliott waves, use all the tools in TradingView, and maybe also you like to check exo charts, ATOS, other stuff. Use those tools in TradingView. Don't don't yet pay for like this indicator and whatnot, like all that shit. Use the free stuff, right? Which also I would then recommend Atas over ExoCharts, because Atas is free for crypto. Test the stuff, use the FIBs, the trend lines, the whatever you like to use, and then you'll figure out what different tools you enjoy using. Now, after you know your tools, you build statistics. After you build statistics on those individual tools, then you combine them. You have a couple of rules because you had statistics, you know the results of those individual tools and the statistics, so you have some rules that you can make out of that. You combine the tools, build statistics on the combination of tools, which can include Elliott Waves. You can include Elliott Waves in your strategy, right? And then you are going to tweak, improve, maybe add something, remove something, and that's how your strategy improves. And that is how you can trade Elliott Waves as well, but with a little bit of extra confidence because of the other confluences and rules, entry requirements, I should say, that you're looking for. First time seeing your video, much better than some of the jokers out there. Thank you, Fabio Brondi, appreciate it. By the way, some of the names you see here, of course, are not the names on YouTube, but this is how Studio shows them. Santos Sainz, always there. Flotty, always drinking his espresso as well, always commenting. Guten Morgen, Guten Morgen. Coffee met Koen. Exactly, coffee with Koen. Nichu, answer this one here, so you can stop the stream if you want to see the answer, of course. Nichu, what's up, mate? Looking good. Your bronze badge, I think, it won't take too long anymore before that one is going to turn silver. Awesome work. Thank you. Thank you. Robert Hodzinger. Lowry. There is Lowry again. Lowry has been a member 6 months. Yo, clap in the chat for Lowry. 6 months. That was April. Yo, channel was only live for 2 months. M1304, he's been here for ages as well. Hello, my friend. How did you find Riad? Still there. I hope you enjoy your stay. I definitely do. And appreciate the updates. Thanks. Appreciate you. He comments a lot. So really, really cool. And he lives in, I believe, Saudi Arabia as well, if I'm not mistaken. Radiant Jumper. Oh, yeah. I saw this one, but I was busy, so I couldn't reply. Well, don't use the Coinbase chart, which even has much less volume than, let's say, Binance. Why have you stuck with the Coinbase chart? I can answer that question quite simply because the Coinbase chart has the best candles and the best wicks for my personal developed trading strategy. Based on statistics, I know that the Coinbase chart works best for me. And that is the reason why I use the Coinbase chart. Also, the Coinbase chart quite rarely has weird wicks. I mean, just look at, for example, talking about Binance, by the way, let me show you this one. Wait 1 second. Of course, Bybit tends to be wicky, right? But where's the Binance one? Wait 1 second, where is it? Talking about Binance and weird wicks, my friend. What the hell is this? So it just happens, right? Some charts sometimes have a little bit of a wick, which is fine, but Coinbase for me, also here, a wick, no? Coinbase for me just works best with my personal developed trading strategy. Which also makes me remember the question about developing your trading strategy in Diamond. That is what we focus on also, is helping you to develop your personal trading strategy. If you can develop something yourself, that's the best you can do. It takes time, it takes effort, it takes a lot of time building statistics, but the payoff and the profit you'll get down the line by putting the time and effort into developing something will outweigh any course, any YouTube channel, any, oh, he does that, so I want to do that as well, because you have trust, you have the data, you've developed it, and that is how, you get a lot of confidence in your trading. In the end, you will trade based on statistics and not emotions, which help. Seriously, however, it is the 4th. The trend line is not broken. Master Elliott Wave by Glenn Neely. I don't know that book, actually. And if you even count the waves, it does look like the 3rd finished, and it is the 4th. That is what we're looking for, even from the looks of it, but it is not so. Where did you get the 618 rule from? 4th, do go to the 618. It did in this case. The rule that the 618 So what I do is the 618 is invalidated if it hits, or wave 4 is invalidated if it hits the 618. And that is based on probabilities. If you go and look at wave 4s, your most common target will be the 0.236 to the 0.5 everywhere. The 618 is a very, very, very rare target for a wave 4. Incredibly rare to see a 618 bounce for a 4. This is your target area, 236 to the 0.5. That's what you're going to be looking for. 618, incredibly, incredibly rare. Because it is so rare, it really lowers the probabilities it's a wave 4. And that's why I use it for an invalidation, because many other scenarios will increase in probabilities if price hits the 0.618. And trading is a probabilities game. So the moment a potential wave 4, if we're looking for a wave 4, the moment it hits the 618, I will immediately switch to other scenarios that increase in probabilities, and I will leave the wave 4 in another folder that I don't present in my trading videos anymore. Only if afterwards we might see something and, you know, it does work out. But it's so rare. Like, I think in the past, almost like, what's this now? 8 months that we are, 10 months that we are making videos. Like, there's no scenario that comes to mind like, oh, that was a 618 bounce wave 4. So incredibly rare. And because we trade probabilities, the moment a 618 is hit, I scrap the wave 4 and I go look for other scenarios, which in the end always works out very nicely. So that is the reason why, where this comes from. It's all probabilities. And if you look at Elliott Wave information that you'll find as well, you will notice that sometimes the 618 is not even mentioned as a target, and sometimes it's mentioned as a very rare target, but it is so rare I don't like to use it. And I like to make things simple. So the moment it is hit, the probabilities lower so much for a wave 4, it's not worth it. It's just not worth it to look at that being a wave 4 anymore. And we're going to look for other stuff, preferably. We keep it in mind, but we're going to look for other stuff which has a much higher probability of playing out, and it increases your win rate as well from a Elliott Wave trading perspective. By the way, the rule 618 of determining whether the fourth or second by pulling fibs from the second high to the low did not work. Fours do go to the look. It's very simple. If you love trading your 618 for a wave 4, you go at it, my friend. Fours do go to the 618 area, especially in other coins. I thought I discovered something new from you, but it is not so. Where did you? Oh, well, I answered it here, but I'll write it to you as well. But you know, other coins, it's the same thing. Doesn't matter. Doesn't matter. It's all probabilities. But hey, if you want to trade a 618 wave 4, then of course be my guest, you know. But the moment you see a wave 4 going to a 618, you got to be thinking about either bearish scenario continuation to the downside, where you can get a bit of a bounce on the 618, but later it drops, or you're going to be thinking about a wave 2, which would be more bullish because you have a buildup of 1-2s. Instead of a wave 4, you think about a wave 2 for a big continuation to the upside. You're looking for a bigger push. The result is the same, because after a wave 4, you look for a 5 up, which is an impulse. But because the 618 is hit, probabilities increase for it being a wave 2 and a wave 3 to the upside. And the difference is what comes after it. So in both cases, you look for upside, but the difference is that after a 4, you expect a 5 and a move down, but after a 3, you expect a sideways 4 and continuation. So it depends very much on, like, the result can be similar, but the count is wrong. And this is something that happens a lot on YouTube channels as well. With the less experience, usually you can kind of quite quickly see like when a Elliott Waver on YouTube knows the rules, yes or no, based on the counts. So yeah, it's all probabilities. So that's how I would answer that. Thank you, sir. Pleasure. Animal lover. Look at that. One day. Holy moly. Welcome to the channel. Shukran Habibi. My pleasure. I know what shukran means now. I've learned it. Thank you for your work. What's up, Eric? 2 months here. 6 months. Holy moly. What's your preferred bullish or bearish scenario? That's something that I always show in my probability section. So those were the comments. We've been through them. So I answered all of them in this video. And I will also reply, but at least I wanted to answer them already, because after this stream, I got to go lunch, go to the World Championships. So, yeah. Robot, do you have a view on the Fed fund rate, specifically the market crash that follows a plateau? I'm not really familiar, to be honest, with the Fed, and like, quite honestly, I don't even know what the Fed fund rate is. Is that like the interest rate? But so I guess my question would be is that for me it's quite difficult to answer this question. I never really look at what the Fed does, or fundamentals, or interest, or economy. Specifically the market crash that follows a plateau to increases. If you can give me a bit more information, I might be able to work with the information you provide me. Because so at the moment, I don't really have a view on the Fed fund rate, because I don't really know what you mean yet, or what it is. My trading from that perspective is very simple. I really focus on a very small area in my trading. It's almost like how I've gone through life. I know a lot of stuff about niche things, and I never really care about all the other stuff outside of that. Like, yeah, I might hear it or I might read it, but I don't really use it. But I think it is interesting. It interests me because it has to do with the industry, but I won't use it in my trading. So I would need some more information to give you an answer on the question. What's up, CDMs? How you doing, man? Blaster33. Is it possible to have a 5? No. You either have a 5-3-5-3-5, so impulse, correction, impulse, correction, impulse, where wave 2 and 4 are going to be zigzags, or you're going to be looking for a leading diagonal, right? Leading diagonal is the only diagonal that can be a 5-3-5-3-5, or you're going to be looking for zigzags, which means a 3-3-3-3-3. Now, the thing with a leading diagonal where all the waves are zigzags is that these waves can also become double or triple zigzags, which is allowed. So it can be confusing, because a double zigzag can look like an impulse. If you have, for example, here a wave 1, 2, 3, 4, 5 impulse, but then in a double zigzag you could have A, B, C, short range, A, B, C. And then sometimes you're going to be doubting about, is this a lower degree wave 4 and then a 1, 2, 3, 4, 5, right? Where you have a small little like 1, 2, 3, 4, 5. Like, is this then going to be, is this a small wave 4, or is this a wave B? So it can be quite complex to know, hey, is it a double zigzag or an impulse? Usually you can see it, because the impulsive count, you feel like, doesn't really work too nicely. And then the potential for a double zigzag is there. Yeah. Yes, correct, Liquid. Oh, by the way, Liquid Mafia shared, now that he's here, he shared something amazing in Discord. You gotta, everyone, I always recommend to keep an eye on the charts of Liquid Mafia here, one of the 100, that's why his name is red, one of the first 100 members that joined Discord. Shoo, the good old times, hey, Liquid Mafia. He shared this chart in, is my webcam in the way or not? Yes, it is. Wait. Let me quickly turn it off so you can actually have a look at the whole thing, which is what you see over here. So he shared this in Discord. So check it out. You can also screenshot it or stop the video, because I'm going to put the webcam back on now. Boop. All right, so it's a high time frame chart. It's the index chart all the way from the beginning to where we are today, and even further into the future. And I don't know, he's been cooking. He's been like very actively looking at the chart with a Fib time perspective. He also uses circles, like Fibonacci circles and stuff. Like, it's quite incredible. But yeah, he's been looking at the chart like this, which I think is a very unique way, also with the emotes, of showing the chart. So yeah, you can check this one out in Discord. It's a fun way of expressing technical analysis. Laurie, thanks for the stream. Always a pleasure. Good to have you around here. Of course, it's evening now, or end of the afternoon. Thanks for being here. Adi Baroncia, what Elliott Wave subwaves are easier to trade or give you a better entry if you miss your entry? I would say, so usually, how can I answer this? The easiest to trade waves are a wave 2 and a wave 4, funny enough. The reason is that once you get an impulse, it's up to the Elliott Wave analyst to count it as an A, 1, or C. And then sometimes in videos I go over this. But if you see, or if the probabilities are high for it to be an A or a 1, you expect a retracement, but you don't expect the low to be taken. So if price is going to start ranging, you don't have to focus on the structure of the range, right? You just need to know the Fibonacci levels of a 2 or a B. But because in a wave 1 or A, you expect a continuation in a C or a 3, it makes life very easy for a trader. If you want specific entries, then you need to know the sub-wave count of a 2 or the sub-wave count of a 4. But I would, if you want to make things very simple, look at the common targets for a 2 or a 4, and then if your probabilities are higher for the impulse up or down to be a 1 or an A, look for the retracement targets of a 2 and a B, and then trade that, where easy stop loss, very easy invalidation. And yeah, because the invalidation is because below the low or above the high, and then you trade a C or a 3, which is the move that you want to catch, because it can be extended as well. So that's probably, from an Elliott Wave point of view, those are the easiest. It's the same as what we had on even higher time frames, right? Oh, like look, throughout this move to the upside, we've been making videos all the time, no? Also down here, and in general, right, we had this move to the upside here. This move up was too long in time, remains too long in time for a wave C, because I remember people looking for an ABC. I was looking for an ABC when price did this here. The moment price did this, especially once it took the high, but also already here it was a bit meh, right? And yeah, this kind of like this, especially this peak, invalidated a wave C for a flat ABC for me. So then probabilities were higher. I was looking for an impulse here, either a wave 1 or a wave A, meaning this range for me was a B or a 2. And because I then expect continuation up with also this wave not yet being a 5, it makes life easy. Yes, the retracement was very shallow to the 382 from the low to the high, right? It's a shallow retracement, but you are expecting more upside, right? So if price does come down to the 382, which is a minimum target for B, minimum target for a wave 2, right? The 236 for a wave 2 is incredibly rare. So the 382 is a less common, but minimum target for a wave 2. It's an area of interest. Right? It's an area for, I might buy here a little bit, because I still expect continuation. And you can do that, like, and of course, if price would have dropped to the downside, like if you do spot, or if you look into swing trading, of course, if this is a 382 entry, your official invalidation is all the way down here. So from a risk reward perspective, it's shit, right? But that is shit as long as price is here. But if price is going to go here, you're like, fuck, this is the best trade of my life. But you don't know what price is going to do, right? You think like, oh, an entry here, stop loss down here below invalidation from an Elliott Wave point of view, or you put your stop loss on the 886, it would invalidate a wave 2. But yeah, you're in profit, right? Yeah, you might like currently be at a 1-to-1, like your risk is going to be the amount of profit you have, but you have profit. And you also don't know yet how far this is going to go, right? We don't know. Will it continue up, and how far does it continue up? We don't know. If you are having a spot back and you're looking to like swing trade, right? Holding spot and all that stuff, then yeah, I mean, you're in profit as well. Now, if you know Elliott Wave rules, if you're here looking for a corrective structure, which we did, like either a WXY or an ABC, we were looking for price to like, not like low probabilities to take the low. So arguably from an Elliott Wave trading point of view, potential entry area, stop loss below the low. If you go so far down, you wick this low, well, we have another potential entry here with the stop loss below this low. So it makes, you're not going to win every trade, but you can play the probabilities, which then means you have a shorter risk here, shorter stop loss, means higher RR, right? More profit. So that is how you can use Elliott Waves, right? And also locally, after this push here, right, we're going to push to the upside here on high volume. We're looking for this to be part of a wave 3. So the moment you go into ranges, you're looking for higher. And constantly when price was making a high and going down, it looked corrective. When we were in this range here, what did we do? All the probabilities on the medium time frame, we're looking for higher. We are looking for higher. We are looking for higher. Each of these drops, right? We were looking for higher. Those are the easiest trades, basically. We don't really necessarily have to know what's going on here. We don't even have to know how deep it really goes. As long as your risk management is on point, you know the invalidation of the scenario for a wave 4 to 618, for example. If you're looking for a 4, if it's a 2, it's fine. But that's how you can, like, you know, the ranges. The ranges are actually easiest to trade in an impulse, because you based on the range, if it looks corrective and probabilities are higher for it to be corrective, you can somewhere in that range load up. You expect continuation to the upside. So here, and then it's about risk management. This was a range, and this range came after a big push. You expect the highs to be taken at least for a wave 5. You took the high over here. You retraced. Now, if you're looking for a wave 3 or a wave 5 continuation, the moment you like take the highs on like high volume, you don't want to see the lows taken again of a wave 4, right? So the moment price goes down here, you're like, yeah, you know, I'm not having it. So either your stop loss, your break even because price came back, or you have a loss here, which is fine because you're going to be looking for the next setup. Price grinds to the downside. It goes too low for this, and also it takes too much time for this to be part of an impulse up. Probability is higher to move down. We had a over here 5-wave structure, WXY. Remember it very nicely. It was a beautiful one. Hitting the 382 from the high to the low. What we're looking for, move down. We're in a range here. What are we looking? Higher probabilities down. We get the move down, right? And then we assess again. So yeah, it's the ranges. It's a long answer, but hopefully it clarifies. So if you have a certain amount of Elliott Wave knowledge, it's probably the ranges that are easiest to trade. Because once the impulse happens, you know, you can buy in an impulse, but then you're breakout trading, right? So I prefer to not do that, I suppose. A few additional hearts. Thanks, man. Hope you enjoy your travels. Thanks for taking time to your flock. Get out of the hotel room and go. I know. Yeah, I gotta have lunch. It's a nice room though. Nice. It's a nice hotel. It's Movenpick Hotel and Residences in Riyadh. The ticker for is EFFR. Use it against, say, S&P. I have no idea. So. Okay. Ooh. I don't know. I don't know what I'm looking at. So yeah, I'm sorry. I can't. I can't do anything here because I don't have that experience with that chart. Did you eat Mandy or not yet? Is that like a fruit or something? I don't know yet what a Mandy is. Mandy food. Riad. MP sandwich. I have no idea. What's a Mandy? Serving the best Mandy. Looks like chicken. Well, I did have chicken yesterday, but not like this. So yesterday we had chicken with a big group, but So I'm not sure. Maybe I had. Needed as the Fed releases the new rate. I see. That's what the news is about, right? When the fund rate plateaus, then drops, the legacy markets have crashed. 2007, 2020, and now we peaked and plateaued again. Ooh. But like after the news comes in, is it then common for price to create more greed by moving up and then crash down, or you expect a big flush? What is your probabilities for the weekly? Well, the probabilities on the weekly are based on the probabilities of basically the medium time frame that I do counts in this video at the beginning. But also, I would recommend Elena to go to my channel and check the high time frame, like the cycle, macro, and high time frame video on my channel in the playlist. If you go to my homepage, scroll down a little bit, because that is about the weekly. I analyze the monthly cycle count as well as the weekly, so you get a better idea. Do you think price will go below 30K? In the bearish macro scenario, yes. Arguably in the bullish one as well, by the way. If you are looking for a double 1-2, where's the 786? In a double 1-2, but it's not something I'm yet looking at. Currently the 786 is at 29K. But we still expect higher prices to come. Even if price moves down here further, we're still expecting prices to go above the highs that we have here. Look for other resistances. So like 1, 2, 3, 4, 5, arguably a possibility. Where's the support? That's 30K. In a 1-2-1-2, if this goes higher, probabilities decrease. You're going to go below 30. In an ABC, you expect a bear market on the macro, right? Lower prices. In a 1, 2, 3, 4, if this is like 1, 2, 3, 4, 5, then you're going to be looking for a massive wave 2, right? And then you do have probabilities to go to like golden pocket, which is just below 30K. The thing is, I wouldn't like, this is big support now on the chart, like above 30K. 32 to 30 is big support. So then you have to break the big support. So yeah. So probabilities on the weekly at the moment are to still look for higher. And macro bearish or macro bullish, well, because of the 3-8, so this is what I say in the high time frame video. Because of the on the daily, price bounced on the 382 at 24K. And the 382 is a higher probability generally for a B or an X compared to a wave 2, which lowers the probabilities that the wave we have to the upside now is a wave 3 or another wave 1, but increases the probabilities a little bit for potential C, if you know what I mean. So yeah, increases the probabilities a little bit for the macro bear, but at the same time, as long as we don't see local weakness, there's no reason to think about very low prices, because as long as we don't see strong weakness, especially I want to see big bearish CVD divergences if that happens. Just like at the low at 15K, we had bullish CVD constantly building here. We had like bullish CVD here, bullish CVD here, bullish CVD, bullish CVD, like it just kept going. It just kept going. That's what I want to see, but then the other way around. And that is when things get interesting for a potential bigger move towards the downside. So, but at the moment, we are not seeing that. On the contrary, we still see, if you zoom out, bullish CVD. Yeah. Yes, correct, Elena. Yes. Where either wave B is like, so wave B is then a zigzag. You're either looking for an A, B, C in a zigzag or an A, B, C in a flat, which would wreck. Oh my. If that becomes a flat, you grab the all-time high, You fake out, you go down in a C below 15K. Imagine. You know, I'm gonna giggle if that happens. Jeez. That would be probably a best case scenario to wreck like the whole of the emotional traders. Oh my, buying the all-time high and then go down to below 15. Whew. I mean, it's not really something we yet think about, but oh well, we do, because else I wouldn't think about it, but it's not yet on the chart. But it is something I'm thinking about. Yeah. I have several ring confluences at this price, but one alternative is 38,900. Yes, yes. That's also an area of that's in confluence with the point of control and the daily naked point of control in that area as well. Yeah. What's up, Adrian? I'm at work. Yeah, sorry. Times are random now for streams and everything. But welcome. Gotta go soon, though. The doctor, it crashes when the cut is being announced. Sometimes it even tops before. Okay, well, that's interesting. That would be interesting for price finding another low. And then we have to wait and see. Like I mentioned in the analysis part for everyone just joining, right? The analysis part is at the beginning. We're in the chatting section now. When price moves down, we want to see proof of support, right? We're not here to catch wicks. We're not here to FOMO and YOLO. We are sensible traders with a plan and a strategy based on statistics. And we know that if we just follow our plan structurally day in, day out, at the end of the day, we're going to end up with profit. That's how we trade, right? That's how we professionally trade. We have a plan, strategy, statistics. It works out. Or it doesn't. Stop loss hit, but that's fine. If you know your statistics, you won't care. It's just another trade. But the moment price goes down, you know, we want to see some proof of support, whatever that is for you, of course. Yeah, so it would be interesting to see price moving down. Would be quite interesting to see it crash as well. But not sure if we're yet in that phase. According to history, yeah. History doesn't rhyme. No, what is it? Doesn't repeat, but it can rhyme. So, well, will be interesting. Yes, exactly, robot. More greed. Price move. Also with 50K, if we go to like the 50K area and we continue up locally, which at the moment is still the highest probability, that we will see more highs to come. I would also like to, and that's what I said in the analysis part as well, is improve the greed, or get more greed. More greed, more people FOMOing in, then turn around. So, okay, everyone, I'm going to continue my day here, answered all the questions in the comment section as well as here in the chat. So what I have to do is continue, you know, with the regular stuff, Global Esports Federation stuff. Actually, I have my folder here as well. Up. If you want, you can Google about what that is and what the Global Esports Federation does currently in Riyadh for the Global Esports Games, #WorldConnected. So that is our motto. And I'm a board member of that organization, which is the reason I'm in Riyadh. We had a board meeting, General Assembly. We have the World Championships here with a lot of countries represented, over 100. I don't know the exact number, but we have 153 member federations. But they are not all here because not all are qualified. So I think it's about probably about 100, a bit more. And yeah, gonna go have some lunch and then go to the venue. Make sure if you want to stay up to date with what I do, go to the Instagram page, and please don't get scammed, because there's already people that are scamming, like already faking it. It's just Kunz Trading, not Kunz Trading Official and all that rubbish. Just Kunz Trading, right? That is the channel you want to have, right? With the link here to my YouTube channel. 119 followers. I open it up as well. It's not private anymore. I used to do private, but then I noticed there's already a scammer with my name, so who cares? You know, you just got to know. You just follow the official links, and you always end up on the official channels and not the scam channels, right? It's your responsibility to not get scammed. So I really have to work on my pictures, because I barely ever do pictures, but I do stories of, you know, where I'm at, where I am, what I do. And so if you want to stay up to date with like the shit that's going on here, make sure to go to my Instagram page, because I'll be uploading there as well. So that being said, thanks for hanging out. Thanks for spending some time. Lago Caballero, what's up? I'm not gaming. I used to. I used to be a professional gamer, yes, but I'm not a pro anymore. So I'm just a board member here of the. I mean, just a board member. It's a big organization. We do global stuff, and we have an amazing announcement coming soon, as well. I can't say it. I'll get my ass kicked. But yeah, amazing partnership coming up as well. So anyway, thanks for hanging out. I'll catch you guys. Well, probably tomorrow. So won't probably have time for another update. But hey, I think this is a good enough update. We went through all the scenarios, probabilities. So trade safe. News coming up. Don't forget that. News coming up today as well. So yeah, cheers. I'll see you guys later. Bye.